Good morning, girls. Now we'll continue with the concepts of yesterday's. Yesterday we have done business entity concept, money measurement, going concern, accounting period and cost concepts. I hope you are clear with this. Now next we'll go here. What is a dual aspect concept? Now what is a dual aspect concept says here? Dual only you know that it is a two, right? So any aspect you take here, there are the two types of involvement will be, the aspect will be involved in that. What do you mean by here two aspects here? Now when you say as you bought furniture for cash. Now when you say as you bought the furniture for cash here, you will find there are two things are happening in that. What are the two things are happening? You are buying something, means you gain something, as well as you give away, means you are losing something, means you are receiving the furniture you are gaining and you are losing the cash. So the two aspects are involved in any transaction. So that is what here we call it as the dual aspect concept. So in this here we say as there are always any transaction you take here, there will be the two aspect will be involved. When you say as I sold goods, so when you say as you are selling the goods, what is the gain aspect here? Cash you are gaining. What is the losing aspect here? The goods are you are losing, means you are giving away the goods. So always any transaction you go here, and suppose you can even write down in your notebook, rough notebook, like okay, what are things are transactions? Suppose you went, you bought some jeans. So okay, what is the gaining aspect? What is the losing aspect? You paid some medical bill. So what is the gaining aspect? What is the losing aspect? So all that here we can make, right? You can prepare by yourself as to understand what is a dual aspect concept. Okay, the next we have as a revenue recognition concept. Now what is the revenue recognition concept here? So this one says as when the revenue has been recognized. So if you see in the previous class I told you about what is the accrual concept. It says as when the cash is about to receive, right? Then we can enter in the books of accounts. It is the same thing here, revenue recognized. When you say as interest is receivable for the year, means already it is recognized, you have to receive. Then that particular transaction you can enter in the books of accounts. That is what here revenue recognition concept. Next we have as a matching concept here. Now what is a matching concept? So we need to match the two things here in order to know your profit or your loss. So what is a profit or loss to match here? To find your profit or loss, what we need to match here? Your expenses with your incomes. How much you spent and how much you received. If you compare those two, you can able to find out whether you are in profit or you are in loss. That is what we call as a matching concept. Next we have as a full disclosure. What is a full disclosure? It says you have to furnish all the details here in order to arrive true profit or loss, or in order to know the financial statement. So full disclosure means you cannot ignore certain things. You have to furnish, means you have to provide all the details which is required in order to know the profits of the company. The next will go as a consistency. Now consistency, if you see here, it is a regular, right? So you need to have a consistency in the accounting methods. We cannot prepare 1 year one method and the next year in the another method. So accounting has to be maintained in the same method in order to compare your result of previous years, or we can forecast for the next coming accounting period. That is what we call as a consistency. So consistency means accounting should follow the same set of methods in all the years in order to compare your results. Results are nothing but your profits or the losses of the company. Next we have as the concept of conservatism. Now what is a conservatism? Which are the things are required for you here in order to find out the profits here, that is we enter. Means suppose here you say as we cannot assume more profits and you can enter into the books of accounts. Always we can take into consideration of your unforeseen losses. Now always we assume, right, at home also you must be seeing your parents must be saving some amount for the future unseen events, right? So tomorrow something can happen, so you save some amount. The same thing even in the business also, we foresee certain events and we preserve certain amount, like reserve you transfer. Means we can always forecast unforeseen losses. You may assume, okay, tomorrow it can be, there may not be any demand for my product, so I have to keep it. Or suppose there is no supply, there is a natural calamities happen, so I may not able to supply. So what are the things it can happen? Or there can be fire accident can take place, or stock can be reduced. All that, the unforeseen losses we have to keep in our mind when we prepare any books of accounts. But we cannot prepare unforeseen profits. You cannot assume anyway I will get the profit in the next year, so let me save it or let me transfer it. No, always we have to have a reserve for unforeseen losses only. Next one is materiality. So what is a materiality here? It says as, so all the material facts has to be furnished which is required for you. Non-material aspect you cannot enter. So if you see a second concept only, we say as it is a money measurement. So the measurements can be done in terms of money only we are entering, means material fact. So which can affect your profits or losses, only that you have to enter. That is what we call as a materiality concept. The next one is here the objectivity. Now what is the objectivity here? So objectivity says as, now for example, now when you say as you bought some furniture, right? Suppose you bought the computer. What is the evidence that you bought the computer? You will be having the bill, right? So that is what we call as a objectivity. That is what evidence should be supported by for all the transactions which you are entering in the books. When you say as you paid for the transport, so you need the proof. In the accounting we call as you need the evidence is been required. That's why here when you travel here they'll give the bus or the train fare, everything you have a bill, the receipt will be given, right? So that has to be produced. When you say as you are selling it, you will be given the voucher to that particular person. There is a second copy also that particular seller will be having. If you notice that they'll give you one copy to you as well as they'll keep the another copy. That is a proof as an evidence that they have sold. Or suppose when you are buying, you will get the proof that you bought some goods from that particular trader or the buyer. So these are all objectivity, means you need the material evidence in order to prove your transaction of that particular period or the month. So, okay, so these are all, we have some of the concepts which we have here in this accounting. So these concepts helps us to know better of your accounts here. So this you can go through it here once again, and I'll send you the notes for this and you can complete the notes. Once you are done with this, then slowly we will entering into how to do the transactions of dual aspect, as we said now. So how that dual aspect will work in the accounting. So all the accounts depends on this one aspect, that is a dual aspect concept only. All the accounts will be done. So hope you are clear with this.